Welcome back to a new video, everyone. Today I'm going to be going over the week on Eurusd, analysing what trades I took, sort of how the week went in general, and maybe a few insights on what we can expect next week. Now, I'm not a long-term trader, but I do have to take the long-term trend into account for some of my trades, just because it always helps to trade with the trend, obviously. But my strategies in a base form don't require to be trading with bias. My strategies are very simple. They're just trading price, and I have a few other variants. So my strategies on their own, without taking any additional context into account, aren't profitable really, because you're just trading blindly. So I take into account macros, news, fundamentals, all this stuff. Obviously, you don't have to be an expert in it. You just need to be trading with the sentiment. And as you'll see here, I started the week bullish, just because overall we're in a bullish market on your USD. And I continue that. I know we had this here. I was obviously worried about this. This was on Friday of the week before. And this could very well be a trend reversal. But going into the week, we're still bullish. This could be seen as a retracement. So I stayed bullish. And then you'll see throughout the week, I actually started turning bearish because that's what the market was showing me. And, you know, escalations of war, stuff like this are always going to be weaker for the euro than the dollar. The dollar is seen as a stable currency, even throughout times of war and recession and all this. So I will start with showing my trades anyways. So this was Monday. This was the first trade I took. So this was, that's not right actually. I thought I had this set up. So it was 20 pip TP, 20 pip stop to get close to, we did get close to the stop loss. I think this was something that Trump said, and I thought it was over here, and then we rebounded. See, when Trump usually makes an announcement or something like that, the market usually does rebound because it's always, you could call it market manipulation. There obviously has been market manipulation, but most of the time he says something, the market reacts to it, and then it does its, and then it continues on its original journey, because this was just, as long as it wasn't something that's going to affect the long-term performance of a currency, then you can just fade the announcement. So this was the first trade I took. I entered here, trading from the AE to the OO. I still haven't gone over this strategy in a video. I did a little bit in my last one, but not too much in depth, but that video will be coming. So I entered here, not after the close. I just traded as it was coming up to the 80. And yeah, we're in drawdown pretty much from the start. And then we traded back into profit. We consolidated for a long time. And I decided here, I think it was on this candle, I couldn't see the exact price. I only used 4 decimals on my trading view just because it's easier when I'm trading throughout the day. But I'm pretty sure it was like 834, something like that. So around that area anyways, a small bit of profit, 3 pips of profit. That's where I closed. I just wasn't confident in it after we had done this and started heading down. These trades are momentum based, so this was a good indicator. I was happy to see this, but not this and then trading down. And it was a good decision to close the trade, as we would have eventually hit stop loss. You can never know that in hindsight, but that's why you need to be confident about the trades you're getting into and have a plan for when things are going wrong. You don't always have to close out trades. You could hold it and hit the stop loss if you want to be disciplined or whatever, but that doesn't work for me. This is my discipline. I'm disciplined for when I know when to close a trade and when not to, and I was very happy to close it out here. And a 3 pip win is better than a 20 pip loss. And then I didn't take another trade until Tuesday. This was a 0.5 to 1 R. I actually went over this strategy in my last video. So if you want to sort of see why I took this trade, go back and watch that one, and I'll briefly explain it here. So this was the news candle. I think this was core retail sales. And the strategy is you want to trade in the opposite direction of the news candle after a 5 minute close. So that's where we entered here. We got this red candle closed. And again, we went into bad drawdown straight away. I don't even think I was in profit in this trade until about here, because this would have been very min. I was in a bit of profit here, obviously, but it's in profit for about 5 minutes out of the whole trade until here. And I think this move here, if I can remember correctly, was also something that Trump said. And then I believe this move down here was actually Pakistan potentially negotiating with Iran, something like that. So that's what sent the market down after that, if I remember correctly. I'm pretty sure it was something like that, anyways. And yeah, that was a win, held out till full, 10 pips. Not the fanciest of trades, but this is a strategy that works, and that's all that matters. It doesn't need to be, it doesn't need to look good. It doesn't need to be an entry from the very high or the very low. It just needs to make money, and that's what it does. And then I didn't take another trade until Wednesday. Took 2 trades on Wednesday. So my first one here is we were ranging in. I'll give a bit of context here what this yellow box is. This yellow box is the opening gap for the week. This right here. Now, when you get these on Forex, they are quite high probability. These happen every open on futures and stocks, but on Forex, it's pretty rare to get this, and this is obviously because of the war and things that happen over the weekend. So that's why we have that gap. But they're really great to trade on Forex. I mean, this other yellow box is the week before that opening gap, which we used again. These should always be drawn out, even if it's not just the current week one, the week before, because you don't get many of them. So they're gonna have a lot of use for a good amount of time. But anyways, from during Asian session Tuesday and London Wednesday, we were just consolidating around the 50% area of the gap, and in the gap in general. Asian session, we rejected the high of the gap, and during, I think this was like early New York, or like pre-market New York sort of, we traded through the gap. So I felt that was a breakout, obviously, since we rejected the highs. If this had happened first, I probably wouldn't have took it, because usually the market tends to fake you out for the first time when we're ranging like this. So I was happy to take it since we'd already rejected these highs. So after we broke, I set a sell limit for the bottom of the gap, and I put my TP at the 20, and then I went for a 1-to-1. So I think these should actually be, or maybe not. No, that was obviously just like 17 then. But yeah, very clean trade, minimal drawdown, and we went to take profit very quickly. And when we're trading sort of reversals like this, or retracements into a reversal, it usually does come with a move like this. And this, but just from experience, I wasn't that worried about it, because I know that this coming in like this, a strong move into your entry, is usually a lot more probable to reverse than if we were to trend up like this. If there was no gaps here or anything, if this was just small little moves up and up, I would find that more probable to continue upwards, just from my market experience. So yeah, very happy to take this, but obviously it is worrying when you're waiting for a trade to tap you in on your limit and the market's coming up like this. It can obviously be worrying, but I was confident in my trade. And then we had a trade right after. This is the same strategy as my one on Monday, which is from the 80 to the 00. This is the 20 to the 00, which is the same, just inverted. So yeah, I did debate taking this one, just because we were getting out of this one. So I think I got in. You can see I didn't get in exactly on the 20. I got in like a bit before this candle because I was just debating it. So finally, what I decided on is that I'll go in with a half risk trade. So I halved my usual risk, and I was happy to do that. It's still a strategy that I would have took if I didn't get an entry up here for this trade. I would have happily took this, but you want to protect your profits in the market. So we had such a good week, and I didn't really want to lose any of those profits. I was happy with where I was at, so I took a trade for half risk, and yeah, eventually you can see it did get to the TP. I closed out here. It was actually right at the bottom of this candle before we had a little upturn, and I mostly closed it because we were coming into the next day, and I don't really like holding trades overnight because this is like 5 minute trading. They should be pretty quick. This one was, you know, under 2 hours. I didn't want to hold this one. We'd already been in the trade for like 3 hours, and I would have got my TP, and my TP would have hit about 9 hours later after entering the trade, and that's just not. I just don't like to hold trades that long, but it was not far off my take profit anyways. Like yeah, it was like 3-4 or 4-3. Yeah, no 3-4, somewhere around there. So yeah, like 3 pips off my take profit again. These ones I don't mind taking profits off when we're near the take profit. But these news ones, I explained this in my other video too. Never take anything off these trades. I could have took profit there and basically won a full trade, but since this is only a 0.5 hour strategy, you can't afford to take anything off because it has to be a high win rate first of all, and then to start taking profits off, you're just ruining your edge. So that's why I didn't take profits off any of those ones. But aside from the random volatility this week from Trump making announcements, other things with news and stuff, it was actually a pretty clean week. Especially after we had closed through this gap, I was pretty certain we were going to stay bearish, and we did stay bearish until the bottom of last week's gap. So these gaps are really important to use. I could have took trades on Thursday and Friday, but I decided not to. They just weren't. I just wasn't 100% confident in them, and after here, anyways, we were just sort of ranging. There were trades on in there on the 5 minute, but they just weren't exactly what I was looking for. You could have traded a lot through this gap, and then even to the high. I was looking at a trade to the high. I think it was around here, and eventually we got there, but it was, maybe 7 or 8 hours later. And then I also looked at trading from the 50 up to this when we were retracing from here. Oh no, sorry, when we were retracing from this here. I didn't like how it came so close and then retraced down, so I didn't take that. Would have been a winning trade, but I didn't like the look of it, so I didn't take it. And these are things you find through experience and just an overall gut feeling. There's no point giving profits back to the market when you're not 100% confident in the trade you're taking. This time last year, I definitely would have taken some trades on Thursday or Friday, potentially ended in a loss, and lost profits that I worked hard for on the first 4 days of the week or 3 days of the week. And once you actually get into a rhythm when you're consistently making profits, you'll know when you don't want to trade for the rest of the week, or you'll know when to half your risk to stay out of the market, protect your profits that you've already made. And that's the most important thing about trading, because if I wasn't risking consistently and I had traded all these, let's say I still win all of these and then I go in on Thursday, take a trade and lose, I could have been risking more than the profits of all these trades put together. So you have to be consistent with your risk. And I'm sort of a risk off person. Now I do trade up to 5% per trade on my live account. It's usually around 3%, which some people may say is a lot, but when you're actually on a live account, you don't really tend to trade 1% or 0.5% of your account balance, because as retail traders, you don't have the same bankroll as hedge funds and institutions. So 1% of your account balance isn't gonna be sufficient to actually take take a tangible amount of money out of the market that you're happy with that you can live on. And I said this in another video too, maybe my first video, that I wouldn't trade over 8% of your account balance. That's a bit too much. The most I trade is 5, and I'm happy to risk that because I know that I'm not going to lose 20 trades in a row and blow my account. But yeah, usually my main risk is 3%. So all these trades were 3% during the week, other than this one, which was 1.5. So yeah, going into next week, it's probably a fair assumption to say we're still bullish overall in this market. We've rejected the bottom of this gap, which is a good insight to this is where we might reverse from or continue our bullish trend upwards. But a lot of this depends on what happens during the week. I do think we'll continue bullishly, but during the week we may have a down week this week just because you don't know what's going to happen with the war. You don't know if things are going to escalate, if things are going to die down, if things are going to get solved even. So you have to react to this. You have to be dynamic. You can't just say I'm sticking with buys this week just because the market is bullish. This could be a heavily bearish week, but you could still be right. Then the week after, the market will go up. So you have to stay fluid and react to the market. You can have your predictions, but the market doesn't care about your predictions. And you gain ability through experience to know when to switch your bias. I never really have a strong bias in the market. I'll have an overall bias. It's pretty obvious that we're trending bullishly right now from here anyways. And then other people would say, oh, well, we're bearish because we came down from here. I try to stick with price action that is at least somewhat current. I don't care about what was happening in January, but coming from March, that was only nearly 2 months ago. I'm happy with that. This is the current price. This is what we're working with. I don't care about anything over here, because it's not relevant. It's not relevant for the type of trading I'm doing. I'm literally trading 20 pips out of the market, 10 pips out the market. I don't care what was happening 2 years ago in the market. But yeah, I would definitely be thinking that we could reverse back up coming into next week, but it all depends on what we've got. Do seem to have a good bit of news, a lot of Euro news. Yeah, so this is going to be a pivotal week, I think. Wednesday should confirm, or is this Wednesday, Thursday should confirm the direction of the market. So it's definitely plausible that we won't create much movement from Monday and Tuesday. Could definitely just range throughout those days. I wouldn't be surprised if we were to range between this gap and maybe even back up to this gap. But I wouldn't be taking any bets onto what direction we're going until I see this now. If this news were to come out and we were to send it up here, that's going to confirm my bullish bias. But that doesn't mean I'm going to get in a swing trade because that's not what I do. And if the market is to send it down here, then I'm going to continue selling the price. So there are a few potential trades you can take. So if we were to go down this week, we can look at trading the 50 to the 00. This is another strategy I need to make a video about, but this is so you can trade the 50 to the 00 if we get a big move. It has to be a strong move through here, which, with these news announcements, it would be. So I'd be happy to take a trade down. And then you can also trade the 20 to the 00. That's a potential downside. I mean, I can't say go down too much more than that if we were. We've obviously got some sort of support here that we've broken out from. But yeah, I do think the most probable outcome of this coming week will be bullish. So on this side, you can also trade the 50 up to the 00, which looks pretty nice. Then the 80 up to the 00 as well if we get there. And there's definitely a bit of trading to be done within these gaps as well, I would say. I think we could take trades breaking out from this gap and retesting, or if we're going to range for the first few days, you could take the 50% up or the 50% down, or here to the 50%. And then you can also trade the breakout downwards from here and then retest. So there's going to be plenty of opportunities this coming week. So I took 4 trades this week. Pretty standard for me, about 3 or 4 trades a week. You don't really need more than that. Like if you made nice profits before Thursday and Friday, you can just decide to stay out the market. You don't need to get involved here, especially when the move of the week is pretty much already done. And of course, I don't know that until it happens, but Forex doesn't have as big of a range as futures. We're not going to get another 200-point move down from here unless we had some serious snooze. But yeah, I probably would expect 2 or 3 trades this coming week, at least. Maybe towards the later end of the week, I would say. But yeah, that's my outlook on the market for this week and this coming week, and hopefully this helps you a bit, whether it's the trades I'm taking or just an outlook into market direction. But yeah, I will have videos coming on these other trades. I want to record live while I'm taking the trades I haven't made a video on, just because it's a real trade environment. And even if they lose, I'll post them. And if they lose, I'll post them because that's just how the market works. But I do want to record when I get a winner as well, just to show you that it works. Obviously, this week has been a bit of a false reality if I was showing you now, because 4 winners out of 4 trades just isn't the reality. I've been on a very good streak recently. I'd say the last 2 or 3 weeks, I haven't lost many trades at all. But with that, I have to remember that I may go on a losing streak for that amount of time, and these are things you have to deal with as a trader. You can't win every trade. You have to take the losses. You have to go on losing streaks, and it's hard. But once you know something works and you've tested it, then there's no reason to say you're going to quit trade and stuff like this, change strategy. It's just variance. You have to deal with it, and if you can't deal with it, then you're probably just not going to make it as a trader. I think everyone with at least a year in the market understands that losses are inevitable, but you just have to know how to manage the losses and deal with them. Trading is quite a humbling job because nobody wants to lose in life, and if you're working a normal job, there really is no opportunities to, let's say, lose. You're kind of always winning, or you're just doing your job. You're not winning or losing. But in trading, it's either you win or you lose, and when you lose, it's not nice, obviously. But that's why I emphasize testing your strategy thoroughly, so you can be confident in your trading. But yeah, with all that said, I'm going to wrap up the video. I think I've covered all what I wanted to cover. I don't really have anything to say about Thursday or Friday because I wasn't watching the charts. Well, because I wasn't watching the charts all day. But hopefully you learned something from the trades I took, but yeah, I just wanted to share my analysis with you and the trades I took. I plan to do this every week, so these videos will probably either be up on a weekend or on Monday, and I'll put them in a playlist once I've got a few weeks done, and then the rest of my strategy videos will be coming in the coming weeks as well. So yeah, looking forward to share that with everyone. So I've also been posting a small bit on Twitter and Instagram, so I'm going to leave links to my accounts on there in the description if you want to go and follow me and stay up to date with more what I'm doing day to day, because it's hard to do that on YouTube because I have to edit video, I have to record videos, I have to edit videos, and it's not as real time as posting on social media. So yeah, if you want to see what I'm posting on there, go and give me a follow. And if you enjoyed watching this video, please leave a like and subscribe, turn notifications on so you get notified when I post a video. And drop a comment too if you want to see anything specific, or if you have any questions for me that I could make a video out of and show you on the charts what I mean, or talking about anything trading related really. I don't give advice for other ventures of life, just trading. Any trading related questions, drop them in the comments, and I'll see you in the next video.